What an incredible day of trading for the stock market, guys. It was so incredible. I could not wait till the morning to talk about it. I had to put my other job on hold because, Uncle is a man of passion. Okay, I do things based on my passion. I have to feel it. I have to feel it, guys. Had to put my other job on hold because like I said, this was incredible. What you guys are looking at is the chart for triple Q right now. And we had a false breakout setup. All right. Well, it wasn't a false breakout officially, but it was a false breakout as in we gapped up and it didn't break out. It just broke all the way down to the downside. It was beautiful. It was a false breakout, a failed. I should call it a failed attempt breakout, a gap and crap, if you will. Either way, the bears ate, the sheeps ate, the bull bias traders. They might be crying right now. Not good for them. But before we get to triple Q, guys, let's backtrack a little bit. Let's start with the SPY, how I usually like to do it. Incredible trading. If you guys are interested in a Discord, joining an awesome, profitable trader community where you guys can connect with other traders and get, instead of waiting until after market or pre-market YouTube video, you'll get my content throughout the day. It was beautiful. And the plan today was very, very simple. We follow the price action as usual. We don't do predictions. I wrote here, 596.5 is first support. If it can defend that support, 598 is in play. And if cleared, 600 plus incoming. That was the bull case scenario. And in the bear case scenario, if 596.5 fails, then 595 or lower targets will be in play. The most important comment in this post was, be ready to react. Because that was the plan, to react either to the upside or to the downside. And you can look here on the 15-minute chart, guys. I told you guys in all my videos what time frame I use. I tell you guys in all my videos what level I use. 596.5 was one of my levels. Look at that. The 945 candle on the 15-minute chart closed just below my 596.5 level. That is a breakdown of support, textbook breakdown of support. And of course, I alerted it to the group. 596.5 loss. Okay, letting the group know it's lost. And then when we lost the next support, 595, 593.5, it's lost. Why is it considered lost? The most important thing that I want you guys to get out of this is not that I am alerting you guys, but more about why. The why, not the what, but the why. Why am I saying these levels are lost? Because they closed below on the 15-minute chart. And when it closed below the level on the 15-minute chart, I considered that a breakdown. And if it's a breakdown, do we enter calls or do we enter puts? We, as sheeps, will enter puts. It doesn't matter if we thought it was going to go up. Oh, we thought it was going to go up. It should have went up. But it didn't go up. And instead it went down. As sheeps, sheep-style traders, we will follow the price action even if it goes against our own theories. Does that make sense? That is our loyalty to the price action, not to our own egos, not to our favorite YouTubers, but to the price action. And it was so amazing today. The plan was to look for a breakdown of 596.5 or a breakout of 598. The market makers dropped the price down and we got the trigger. And our trigger was the breakdown of 596.5 on the 15-minute chart or higher. And look at that. Now, when you enter puts or go short based on this breakdown, where do you leave your stop loss? Just above 596.5. $1 from your entry, or if 596.5 would have recaptured. Did it recapture? No. You enter puts, you take most profits at the next level and leave a runner. If you left runners, holy moly, donut shop. Bah! This is what sheep style trading is all about. Upside, downside does not matter. Go back to the daily chart, guys. Let's talk about the plan. Now that we know, and hopefully you guys know how to use the levels that I'm giving you guys. 15-minute chart, daily chart levels. Gotta talk to you guys about what the next plan of action is. Based on this context, it's looking bearish. Yes. I gave bulls the benefit of the doubt yesterday because we had that gap up. We had a gap down from the 27th down to the 30th, and then we had a gap up from the 3rd to the 6th. I gave bull the benefit of the doubt because it looked like a bullish island reversal. But as sheeps, we cannot get too complacent. We have to be ready for either scenario. And now that we got the gap fill and we broke past the gap, that island reversal, that bullish island reversal is invalidated. No more talks about that. No one bring it up. It's gone. But where did we pause? We paused at this multi-month trend line that I have here, okay? This white line that started way back on September 11th. Multiple tests. And today we got what? The 4th test as a support. The 4th test, guys. 4th or 5th test, however way you want to look at it. Either way, it's another test. And where is the level at? 587.5. That is my support level with a fib level of 586 just below that. Okay. Now I do have a fib level also at 589. We lost that level today. That is an official breakdown. And the RSI is not oversold. So if there is bearish follow through tomorrow, one of two things I need to see tomorrow. Either we break down 587.5 and 586 the old-fashioned way, the same way I show you guys on the 15-minute chart. That would be bearish follow through. That would be the trigger for puts, or to keep holding on to your puts with 583.8, 582, 580, 578 all in play to the downside. Bears would be in full control below 587.5 and 586 because that would be an official breakdown of this multi-month trend line. Okay, and can put in a lower highs, people. Okay, now remember this. Although majority of people out there are bull buyers or bear bias traders, they're bias traders. Me and you, we're not like them. Me and you, we're different. We're unbiased traders. Now, I just spent a couple of minutes talking about the bear case scenario. Very important we acknowledge and address and be ready for a potential bullish case scenario. You guys with me? So while 587.5 is support, 589 is a Fibonacci resistant level. Yes, now it is. And if below the breakdown stays intact, and if the breakdown stays intact, then we shall remain bearish. That means if we are looking for bullish opportunities, 589 must recapture. 591 must recapture. I have a zone, 593 to 593.5, okay? A shorter term Fibonacci level with a longer term Fibonacci level, 592.6 up to 593.5. Clusters of fib levels around there. But either way, if the bulls can break through these clusters of resistant levels, as usual, that'll send us higher with 595, 596.5, all the way back up to 600. We had a strong rejection, but maybe if we can put in a higher low, we can actually break through 600 if it tests again. But that's only possible if today's work get undone, which will come in the form of lost levels being recaptured. 589, 591, 592.6 to the 593.5 zone. All must recapture. The price must break through, preferably with volume. But if it's not going to be volume either way, keep your eyes on the price. Just change the Z to the C. Just change the Z into the C. Keep your eyes on the prize is the phrase. But on Uncle Charles' channel, I want you to change the Z to the C. And keep your eyes on the price. Because we are sheeps. Bah! Well, that was a bit dramatic, guys. Let's move on to Triple Q here. We had this attempt of a breakout this morning when the market wanted to gap up above that multi-month trend line. Broken down. You know, for my tier 2 and tier 3 members, I do cover Triple Q as well. And I mentioned staying above 525 would be a good start for the bulls. I wrote that before the market opened. But it needed to clear 526.5 to put those higher targets in play, because I wrote here, if 525 fails, we're likely dropping down lower to those lower targets. And boy, oh boy, did it break down 525. I could show you guys in a smaller time frame, but I think you guys get it at this point. What is the next plan of action, Uncle Chartist? Well, you guys see where that arrow just pointed. That's where the market paused today. And that is a Fibonacci level, which is at 513.6. Uncle Chartist has support at 515 and 513.6. RSI is not oversold. So one of two things that must happen, just like with SPY. Either we get the breakdown of those levels or we gap below those levels. Either way, getting below 515 and 513.6 would be bearish and give us bearish follow through. 512, 510 or lower would be in play. A target I'd definitely be watching is 505.7 level. That was a previous pivot low back on the 2nd of January. If we are to get a bounce, because we did technically hit this Fibonacci level. If it's bounce time, I will not trust it unless we recapture some lost levels. 517, 518.5, 520, all must recapture. 521.5 and 523 are higher levels to watch based on this multi-month trend line. And it must clear for bulls to put a bottom in. Okay? The breakout of this downtrend line would definitely be bullish. Okay, guys? Tesla. Guys, please excuse all the lines that I have here. I use these levels to trade, guys. But let's keep it simple here, okay, guys? I have resistance at 396.3. That is a Fibonacci level, all right? There's also resistance at 395, but the critical one is at 396.3. If bulls want a bounce, because they've been getting slaughtered like really, really bad. If bulls want a bounce, they must recapture that level. They must recapture that level to put 398 and 400 plus back in play. As long as below that level, today's breakdown stays intact and more downside is possible. All right, guys. Next support that I have is at 393 and 390.5. Those levels break down. Don't argue with the price action. More downside is possible. 389, 387.5, 386, 384.5, and 383 would all be in play. So unless we cleared those levels, 396.3 and 398, I would remain bearish on Tesla. Look at NVDA. This is a 15-minute chart on NVDA, guys. And I am extremely proud of the price action for NVDA today. I cover this for tier 2 members, guys. Amazing breakdown. I wrote here 153 is first support. If it can defend, 155 is in play. And if cleared, 157, 159 would be next. But if 153 fails, bears need to show follow through and break down 151.5 and 150 to trigger more downside with lower targets in play. Look at that, guys. Look at that. This is a 15-minute chart. Broke down 153. Broke down 151.5. Broke down 150. It's just breaking down support levels after support level. Even if you missed the 153, you could catch the 151.5 breakdown or the 150 breakdown. It just kept playing out beautifully. Beautifully. No predictions. Just our ability to react to the price action. Look at that big body red candle. Holy moly, I'm messing up here. I'm getting too excited. Look at that big body red candle. Wow. Let me tell you, the bulls. Hey, bulls, you guys had your fun, okay? It was a beautiful move to the upside. But this was a beautiful move to the downside. This is why I love trading as a sheep. Upside, downside. Wow, it's just incredible. And we broke down a fib level at around 143. Very close to that next fib level around 140, okay? So the plan for tomorrow is simple. If bears want to keep it bearish, they must stay below 143 and they must break down 140 to put 138, 136.5, 135 and 133 all back in play. Trust no bounce unless 143 and 145 can recapture to put those higher targets back in play. 147, 148.5 and 150 plus. All right, guys. IWM, I mentioned yesterday, it just didn't look bearish. It just couldn't fall. I mean, it didn't look bullish. It couldn't follow through for the W pattern to play out. It couldn't clear the 226 level. Bears were able to push it down today, but they'll need to push it down below 222 if they want a more serious pullback. Okay, loss of 222 tomorrow would definitely be bearish. 220, 217, or 215 would all be in play. I will trust no bounce unless 224 and 226 can recapture, especially that 226 level. It needs to clear to be bullish and give us 228 and 230 plus back in play. Apple, it looks like it's ready. I wouldn't say ready. RSI is making me a little nervous here, but it does look bearish still. And losing 241.5 and 240 tomorrow will definitely be bearish. Follow through, put in 238 or lower in play. Okay, watch if we lose 241.6 and 240. Definitely would be bearish. I'll trust no bounce unless 244 and 246 can recapture. That area has been getting some strong selling pressure, so I would not trust it. I would not trust no bounce unless we can get through and back above those levels. Amazon, now Amazon got the false breakout, okay? This is a legitimate false breakout, not like Triple Q. This was an attempt of a breakout, but it failed. Amazon definitely a false breakout. Holy moly, donut shop. Let's just get to it, okay? It broke down the fib level I had at 223.6. That is resistant, and if it can break down 222 and 220.6, more downside is possible with 219, 217, and 215.9 all in play to the downside. Trust no bounce unless 223.6 and 226 can recapture. Those two levels recaptured, then I would trust the bounce and be bullish again. Otherwise, this looks bearish to me. The beginning of something bearish, I might add. Very nice pullback on Meta after an incredible bounce, okay? Incredible bounce. This is why I like to trade unbiasedly, because up, move, up, down, incredible. Yeah, next supports at 617 is 615.6. If they fail, 614, 610 or lower is in play. I think we can drop all the way down to 607 to the 603 zone if we can break down that support level. All right, but otherwise, if 617 and 615.6 hold, I'll trust the bounce more if 619 and 617, 618.5 and 620, excuse me, must clear. If those levels can clear, then 622 and 623.5 is in play. A recapture of 623.5 would make me shift my lean back to being bullish. And I'll definitely favor we go back and hit 630 or higher. Okay? Microsoft looking bearish. It could not get above that 429.2 or 431 level. And it puts right down to this fib level I have at 420.8. Bouncing a little bit in the aftermarket here, okay? If we open where it's at now, then bears need to break down 422 and 420.8 to put 419 or lower in play, okay? They'll definitely be bearish if those levels fail. But to get a bounce going, we're going to have to clear 424 and 425.5. If those levels clear, we can go up higher. All right, 425.5 clear, 427, 429.2 or higher would all be back in play. I would shift back to being bullish above 429.2 and 431. DXY got the bounce. After a nice pullback, it got the bounce. Trying to recapture 108.6. If it does, that's bullish with 109, 109.3 or higher in play. So above 108.6 is bullish. That'll be a false breakdown setup. That's a bullish setup. And below it, that will keep the breakdown intact. So above 108.6, bullish. Below it is bearish. Coin, I tell you, Doge and Bitcoin all pull back today. Usually you just trade shares with these, but if you like to trade contracts, wowzers, coin is the stock for you. We talked about a couple of levels. At 283 level was definitely one of them, and it broke down beautifully. We also closed below 265 today, gapping up a little bit in the aftermarket. But tomorrow, if coin can get below 265, it'll keep the breakdown intact, and that will put lower targets in play. 260, 258.5 or low would be in play. I really think it will definitely go a lot lower. I think it could break down 255. I think it could go hit 250. Definitely. All right. Below 265 is bearish. But above it, trust the bounce more. If we can clear some resistance levels. All right. I have resistance at 268, 270, and 272. Above 272 would put 274 in play. And above 274 would make me shift my lean back to bullish. Doge could not hold that 38-cent level. It's bearish to me right now unless it recaptures 38 cents and clear 40 cents. When would I go long again? If it recaptures 38 cents, I'll probably go in a small position, and then if it clears 40 cents, I'll go in a bigger position, okay? Otherwise, it's bearish right now, and if it breaks back below 34 cents, more downside incoming. You can play and make money to the downside, guys. If you can't short Doge, you can just play with coin. Bitcoin lost the 100K level. Yeah. We break down the next support at 95K. More downsides incoming. Otherwise, trust no bounce unless 98 and 100K can recapture. All right, guys. Thank you guys so much. Check out the pinned comment in the comment section. Check the pinned comment in the comment section. Come join the Sheep's Den. I love to see you guys there and serve you guys at a higher level. All right. Thank you guys for being here. And don't forget to say bye.